Right. Tyson Fury has retired from boxing, moved his entire family to the Isle of Man, and is reportedly saving £11 million a year in tax. Not over his career, per year. And before you say it, this is not dodgy, no offshore scheme, no shell company, no brown envelopes. He just moved. Packed up the family, relocated to a crown dependency in the Irish Sea, and HMRC can do absolutely nothing about it because he followed their own rules correctly. That is what makes this so beautiful and so infuriating. Here's what I want you to understand about this story. The rules that allow Tyson Fury to do this are the same rules available to you. The UK Statutory Residence Test does not have a clause that says, unless you are a director of a limited company in the Midlands. It applies to everyone equally. The government wrote these rules. HMRC enforces them, and people who follow them correctly and legally reduce their tax to a fraction of what they pay in the UK are then called tax avoiders in the press. They're not. They are people who did what the rules permit. There is a difference, and by the end of this, you will understand exactly what they did and what it actually takes to make it work. Paris is in this too, by the way, not just decorative, not just supportive wife who came along. She has her own income, TV appearances, brand deals, her own public profile. She is jointly assessed with Tyson under Isle of Man tax law, which matters for the numbers. We'll get to that. The Isle of Man numbers. Let's start with the numbers, because the numbers are the reason we're having this conversation. The Isle of Man is a crown dependency. It sits in the Irish Sea between England and Ireland. It is not part of the UK for tax purposes. It has its own parliament, its own tax authority, its own rates. Income tax on the Isle of Man, 10% on the first band, 21% at the top. That's it. Compare that to the UK. In the UK, once you are earning above 125 grand, the government takes 45 pence of every single pound. Not 40, 45. And those thresholds are now frozen until 2031. Not a typo, 2031. The government announced it in the autumn budget 2025 that the personal allowance and the higher rate threshold will not move for 6 more years. They do not call this a tax rise. Every year that goes by, inflation does the work for them, and more people tip into the additional rate without a single vote being cast on the matter. Technically correct, utterly insulting. Now, Fury's reported retirement income, which includes licensing deals, promotional income, his boxing promotions, business, brand partnerships, runs to somewhere around £25 million a year. At a UK 45% rate, HMRC would be taking approximately 11 million. 11 million per year to fund whatever it is they're currently funding. On the Isle of Man, there is an election you can make called the tax cap. You elect into it for 5 or 10 years. But once you make that election, your Isle of Man income tax liability is capped. For a jointly assessed couple, that cap is £440,000 total for the two of them combined. That is the whole bill. 440,000 versus 11 million. The saving approximately £10.6 million a year. Now Paris, her TV deals, brand work, her income, all of that falls under the same joint cap. They are assessed together. Paris does not pay her own separate bill and then Tyson pays his. 440,000 between them, regardless of what either of them earns individually. So when people say Fury is saving 11 million a year, what they mean is the Fury household is capped at 440 instead of what HMRC would otherwise take. Paris's income counts, the cap covers them both. And on top of that, there's no capital gains tax on the Isle of Man, no inheritance tax, no stamp duty on property, the full suite of things that make concentrated wealth genuinely punishing in the UK simply doesn't exist there. The arithmetic is not complicated. The execution, however, is. Now let's talk about the Statutory Residence Test. This is the part where I need you to pay attention, because this is where people get it wrong. In the UK, your tax position is determined by whether you are UK resident. If you are UK resident, you pay UK tax on your worldwide income. If you are not UK resident, you don't. Simple concept. The mechanism for deciding which one you are is called the Statutory Residence Test. It came into force in April 2013 and it replaced a mess of old case law that nobody could agree on. The SRT is a mechanical test. You don't feel your way through it. You count things, days mainly, and then you look at a table. You are either resident or you're not. Most people who attempt this make the same mistake. They assume that moving is the hard part, finding the flat, getting the kids into a new school, telling the neighbours. They think once they've done all that, the tax bit handles itself. It doesn't. The hard part is proving to HMRC that you've left, because HMRC does not take your word for it. The test runs in 3 stages. First, the automatic overseas test. If you meet in any one of them, you are automatically not UK resident. No further analysis, done. Second, the automatic UK tests. If you meet any of those, you are automatically UK resident. Also done, just in the wrong direction. Third, if neither automatic test gives you a clean answer, you go to something called the sufficient ties test. You count up how many ties you still have to the UK, cross-reference against how many days you've spent here, and look at a table, basically. For someone like Fury, who was UK resident for decades, the advisors will want to land him in that first category. The cleanest automatic overseas condition is this: spend fewer than 16 days in the UK in the tax year. 16 days. That's 2 weekends and a Tuesday. HMRC decided that if you can make it through an entire year with only 16 days back here, you have probably genuinely left. This is the bar they set, and at 16 days or fewer, the analysis stops. Automatically not resident. The rest of the test does not apply. Most people can't get below 16 days. They have a business here, family here, board meetings, events, habit. So they end up in the sufficient ties test, which is where the interesting decisions have to be made. The 5 things that can catch you. The sufficient ties test works like this. There are 5 possible ties to the UK. The more of them you have, the fewer days you are allowed to spend here before HMRC considers you UK resident again. The table is blunt. Here are the 5 ties. Tie 1, accommodation. You have a place in the UK that is available to you for at least 91 consecutive days in the tax year, and you sleep there at least once. It does not have to be your house. It does not have to be somewhere you think of as yours. It could be your parents' spare room. If it is to you and you sleep in it, that is a tie. I'll say that again, because it is the one that gets people the most. It does not need to be your property. It needs to be available to you, and you need to use it once. Tie 2, family. Your spouse, civil partner, or minor children are UK resident. This happens a lot. This is why the whole family moved. Fury and Paris have 7 children. If Paris and the children had stayed in the UK, he would have had a family tie on day 1 of the new tax year. The entire plan breaks, then move the whole family. That's not sentiment, that's legal advice. Tie 3, work. You do substantive work in the UK. more than 3 hours in a day on 40 or more days in the tax year. For someone with Fury's profile, this is probably the one that requires monitoring. Endorsement shoots, podcast appearances, press events, brand launches. If those days stack up to 40, there is a work tie. 40 days is not generous. Tie 4, the 90-day tie. You spent more than 90 days in the UK in one or both of the 2 preceding tax years. Fury almost certainly cleared that before he moved. So he carries this tie into year 1, regardless of what he does now. It falls away once 2 consecutive years pass with his UK days below 90. But right now, it is there whether he likes it or not. Tie 5, the country tie. You spend more days in the UK than in any other single country. This one only applies to former UK residents. If the Isle of Man is genuinely his base and he is there the most, this shouldn't apply. But it is the one people forget to check. So here is what Fury's position likely looks like in year 1. 90-day tie, almost certainly yes. Family tie, no, they moved, apart from the one that got married. That's a choice that costs real money to get wrong. Accommodation tie, depends entirely whether he's kept any UK property available to him. Work tie, depends on what he's doing here and how carefully the diary is being managed. Now the table, this is the bit people always quote wrong, so let me be precise. With 2 UK ties, a leaver can spend up to 120 days in the UK and remain non-resident. Day 121 and they are UK resident for the full year with 3 ties. The limit drops to 90 days, 4 ties, 45 days. So if Fury has 2 ties, the 90-day tie and a work tie, he has 120 days. That is roughly 4 months. More generous than most people assume. But the moment he picks up a 3rd tie, that drops to 90. And if he keeps a UK property available and sleeps in it once, he has just spent 30 days of headroom he did not mean to spend. The whole 11 million saving gone because of one night in the wrong property. That's the margin. Count the ties first, then count the days in that order. So what actually has to change? Let's show you what happens when someone tries this and does it slightly wrong. So there is this founder, sold his business for 4.2 million, decided this was the moment, got a flat in the Isle of Man, spent 6 months there, ticked most of the boxes. What he did not do was stop using his London flat. His parents owned it, but he had a key. He would stay there when he was in London for meetings. Never more than a few nights, nothing that felt significant. 11 nights total across the year. He barely thought of it. HMRC called that an accommodation tie because the flat was available to him, not rented commercially, not formally closed off, available. And he slept there. That was enough. He ended up with 2 ties and 92 UK days, 2 days over the threshold. UK resident for the entire tax year. The whole restructure undone. When I explained what happened, his response was, I didn't even think of it as somewhere I lived. HMRC wasn't interested in his emotional relationship with the spare room. So here's what actually has to change for this to work. The UK property can't be available to you. Rent it out commercially or sell it. Not it's sort of available, but I won't use it much. Unavailable, fully. Because if you hold it, you will use it. And if you use it once, it's a tie. The family has to move at the start of the relevant tax year, not eventually, not they'll join me when the school year ends. The family tie is assessed for the full year. It does not matter that Paris and the children moved in June if the tax year started in April. The day count has to be tracked in real time, not estimated, not reconstructed from your phone in February when your accountant asks. Real time. Every night in the UK is a night in the UK. The 40 working days have to be managed actively. That means whoever is booking Fury's appearances in the UK needs to know the number they are working against, because nobody tells the TV booker what tax year they're in. That is not their job. Making it someone's job is the work. For Paris, the same principles apply. She is jointly assessed. The cap covers them both. But if she were to become UK resident because she spent too long here, because her work ties stacked up, the entire joint position comes into question. They need to manage this together, not as his and hers arrangement. And then the election. When you elect into the Isle of Man tax cap for 5 or 10 years, you can't change your mind. If your income drops, if you want to move back, if circumstances change, you're in it. For someone at Fury's level, the arithmetic still works even in a bad year. But it is a commitment, not a trial. What HMRC does next. HMRC does not read your change of address form and wish you well. For high earners, and particularly high profile ones, they review the position. They have access to credit card records, travel data, boarding passes. They look at where you are spending money, where your children are in school, where you're sleeping. Social media is extremely useful to them. You would be surprised how much of a tax investigation is just reading somebody's Instagram. The Robert Gaines Cooper case is the one that matters here. He moved to the Seychelles in 1976, not for a couple of years, for decades, built businesses there, had genuine roots, a real life outside the UK. HMRC found him UK resident anyway, because his wife and children stayed in the UK, because he kept a substantial home here, because despite the Seychelles base, the centre of gravity of his life was still in England. The Supreme Court sided with HMRC, a genuine, substantial break from the UK pattern of life. That is what is required. Not a new address, a new entire life. The burden of proof sits with you, by the way. HMRC does not have to prove you are resident. You have to prove you are not, with records, with contemporaneous diary, with evidence of where you slept on each night of the year. Not a reconstruction, not your best recollection, a diary. HMRC, in their infinite wisdom, have also made clear that high-profile leavers who continue working in the UK will be looked at particularly careful. There is no written rule that says this. There does not need to be. There are human beings at HMRC and they've got Google. Keep the diary, keep the receipts, keep the boarding passes, have your accountant review the day account at the halfway point of the tax year, not at the end of April when there is nothing left to fix. Back to Fury. £11 million a year, roughly 10.6 technically, and it is completely legitimate. It works because the family moved, because the UK property is presumably gone or unavailable, because the days are being counted, because someone made the cap election correctly, because Paris is jointly assessed and the 440,000 covers both of them, because the advisors know what a work tie is and they're monitoring it. That's not a loophole, that's HMRC's own test applied correctly. The government wrote these rules. The government froze the income tax thresholds until earning 125 grand a year felt like nothing special. The government takes 45 pence of every pound above that. And when people follow the rules and leave, the same government calls them tax avoiders. They're not tax avoiders. They are people with good advisors. The same rules are available to any UK taxpayer willing to genuinely change their life. The question is whether the life you want is compatible with the tax position you are claiming. For most people, the answer is complicated. For Fury, apparently, it's not. If you're a founder, an investor, or a director with a significant event on the horizon, please do get in touch. There is a link in the description to apply to work with us. We can help you with your Isle of Man move, your Caribbean move, wherever it is you're moving to, we can help with that. Again, the link is in the description. Don't forget to subscribe.